The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. And just looking at a few things right now, checking out where the S&P is at. S&P is up 6 points, Nasdaq's up 28. Russell's up $1.50 with the Dow up 2. Gold currently up 28 points with silver up 1.6%. We got copper is down a little bit, down about 0.5% right now. We got oil up 56 cents, corn down 5.25, soybeans down 15.50. Euro dollar is flat on the day. It's down 4 pips at the moment. Pound dollar up 40 pips. Aussie dollar is currently down 27 with euro yen down 34. We got the pound yen up 5, the U.S. yen down 24, U.S. Canadian down 8, and U.S. franc up 13 pips on the day. So looking at that and seeing how everything's weighing on out, going on and we'll check out the news that's coming up. Haven't had a whole lot of news. Had a little bit of news this morning with existing home sales. Got released at 10 a.m. this morning. And so, different currency pairs can get impacted by that. Of course, the indices getting a little bit of strength from that as well. But, that's a little better than, really not better than last number, but, and actually, I guess, in all cases, it's worse. So worse than the last number, worse than projected as well. And let me see here, our highest impact currency pair usually on this is let me check it out. Right here, I'm seeing actually Euro USD had the biggest impact last time, along with, we'll see if that was consistent. Yep, Euro USD and USD yen tied. And then going on down, same thing, Euro USD, and then USD yen, and then Euro USD. So overall, it looks like Euro USD is at the biggest impact as far as currency pairs are concerned on this news announcement that came out this morning, where existing home sales were lower than the expected number, and basically came back in a little bit lower than last month's levels as well. So while we're there, let's go ahead and check it out. We got the euro dollar over here. We can go on over to when the news announcement was released at 10 o'clock, and we saw just a pretty minor impact off the announcement. So euro dollar is sort of floating around a little bit. Dollar getting a little bit weaker on that. Market still rising despite the fact that it did that, but it went ahead and filled in. I guess you could say it filled in its gap, even though it crossed over it several times. Filled in the gap, sort of, post-market open after bouncing right off the pound-dollar deviation level. And let's see, what else do we got going on today? We're going to have one of the members out of the British Bank there is going to be speaking at 2:30, so that could cause a little volatility there. Aussie dollar is going to have the CB leading index, not a high impact report, more of a medium impact. China tonight at 9:45 will release its HSBC flash manufacturing PMI. But not really a great way to measure that yet. Just starting to get some numbers in, but can't quite measure any kind of currency impact directly on the Chinese announcements at this moment. And looking on over, we got the IMF meetings going on, of course, today and tomorrow. It's day 3, and what are they going to do to solve the issues going forward? And they haven't solved them going backwards. And there's a lot of stuff coming out. You even got the Italian president threatening to resign if the politicians won't meet their responsibilities on reform. So basically he's saying either do it or I quit. And I don't know if they're upset about that, but they're very excited that this president is elected. So I don't know. It's going to be an interesting political environment over there in Italy. And definitely trying to tout the people against the politicians there, and of which, of course, he is one. But anyways, nevertheless. But that covers that right there. And going on and looking forward, checking out what else is coming out. Like I said, we have the IMF coming out tomorrow with day 3 there. But going in and looking a little bit deeper, seeing what do we got. We have a whole lineup on the roster for tomorrow morning. So tomorrow morning, we're going to have the French flash manufacturing PMI come out on the euro. Follow at the exact same time the French flash services PMI will come out. So you got manufacturing PMI and services PMI. And then at 3:30, you'll have the German flash manufacturing PMI, which is a higher impact usually on the euro itself. And then we'll roll on over, and then you got several other medium impact reports coming out. And then a little bit later in the day, before we get to any kind of impactful announcements, 8:30, core retail sales on the USD CAD are coming out. And Bank of Canada's Governor Carney is going to come out and speak as well, so that obviously could have a significant impact on the market. And then we'll have new home sales coming out tomorrow. So how strong is this recovery really? We're going to be finding out as these home sale numbers start coming on in. And has the housing market really recovered? So like I said, we have the existing home sales today, and we're going to have the new home sales coming out tomorrow. And then New Zealand will release its official bank cash rate at 5 o'clock tomorrow night. And then Aussie dollar is going to kick on off with a CPI quarter over quarter announcement coming out at 9:30. Again, the Aussie dollar releasing its CPI quarter over quarter at 9:30. We'll be able to check that out and see how the market moves. Like I said, overall, pretty quiet. And let's go ahead and check out a few of the markets. And we can see right now, we'll go in and we'll just scroll first through the indices and see where they're heading, what they're doing. But we had the S&P sort of had a little rally overnight all the way up to the 0.7 deviation. Pulled on back to settlement and oscillated around there for quite a while this morning before finally deciding to pull on up and hit the 0.5 deviation, and now it's settling back down. So it would have hit its deviation stop already. And so definitely want to be aware that we could, choppy market could be right in front of us. And let's see, we'll go ahead and check out a couple of the other indices. Usually most of the indices tell the same story. But we got the S&P right there. We'll go ahead and we'll look at the Dow. And on the Dow, same thing. Moved up to 0.5, down 0.5, back up to settlement at this point. So it didn't make it back up to 0.5 yet. It may have only made it back up to settlement and filled that gap. And it's just literally hanging out right there and starting to pull on back like the euro dollar did. And so we'll see if it keeps pulling back, but it's not as resilient, but it did move a full deviation. So a half plus a half makes a 1. And so we did get that full deviation move off the Dow as well. Rolling on into the Russell, seeing where it's at. It moved on up a half deviation, almost tried to hit that 0.7, but it fell down. It fell down hard and fast this morning. So earnings and everything else affecting it. But it dropped on down to a -1 deviation after the market opened before pulling on back up, hitting settlement, and now pausing like the other ones once that lunchtime hour kicked into place. But again, we got a full deviation bounce right back up, and just a perfect, good move right there on the Russell. If we scroll in and we'll look at the Nasdaq. So on Nasdaq, it has been resilient all morning long. Been happy with the earning results that have been coming out. It was up 0.5, also between 0.5 and 0.7. Even almost tried to touch settlement, but didn't even break below it once. And moved on up now to a +1 deviation, and is now backing off. So it looks like a lot of the indices now are starting to chill out at the moment. Be very careful on your long positions. You might want to be looking to tighten your stops up a little bit. But all of them have broken on up above those levels and are starting to hesitate and pull back. Even the Nasdaq, which was the strongest of the group today, and the Russell being the weakest of the group, so has climbed back up to settlement now and chilled out. So like I said, be careful on those positions there. And we can look at our metals. So right here we got gold, and gold has been basically just oscillating right now at the 1.5 deviation. It ran up, had a great move last night if you were trading that. You could have traded gold, ran on up literally from basically gapped up right there, but moved on up, and the official settlement price varied. But as it moved up, we got all the way up to the 2 deviation level, not quite to the 3, basically almost 2.5. Pulled on back, settling right now, and literally just oscillating around the 1.5 deviation marker. And we can go in, we can check out silver. And over here on silver, let's see here, we got our settlement price, market opened up, really just moved around like crazy before finally reaching on up and getting up here to the 0.7 deviation level on silver. So, just a lot of interesting moves, how everything is turning out. And but not, definitely silver not reacting the same way to everything else that gold is at the moment. So they're not always correlated. A lot of times, one big moves, the other moves the same, at least a large amount in that direction. But in this case, we're seeing that is not the way it's lining up. And you can always go in and just compare and look at correlations, see when they break down, see the impact of when they're together, see the impact of when they separate. And what I'm looking at is just to check out, I want to pull up settlement prices, but they're gold futures, and looking over They're not even posting their settlement up right now. So CME's doing some updates on their site. And let's go ahead. We'll go ahead and look out copper then, since they're doing the update on that. But you got right there on settlement, moved on down to half a deviation, which is actually a big move for copper. So copper, when it moves, man, it's fast and it's furious. And but it moved on down to half a deviation, pulled on back up, did not quite fill the gap in the morning session hours there. It tried to, but was not able to fill that gap up yet. And it looks like it's trying to just, maybe if it can, trickle back up and close out pretty much where it, closed out on Friday. And now let's check out our ags. So over here on corn, we got corn, and it literally just gapped down right to the half deviation, did about a 50% pullback off that move, and then dropped down perfectly to one deviation, and then pulled on back up to a half deviation, just oscillated, and is hanging out at the half deviation mark at the moment. And soybeans, a lot of times will move in a similar fashion, but not exactly the same. Didn't do that full pullback. But we see it also gapped down like corn did. Moved down pretty much overnight. You obviously don't see a lot of activity in the overnight session right there. And, midnight to pretty much, around 7 a.m. Things start picking up after 7:30. And so when it does pick up, it picks up fast. The market opens on up. And it moves down really hard. It hits that 0.5. It's just trying to break it over and over and over again. Finally, it is able to close below the half deviation mark, moves on down to 0.7, and now back up to 0.5. And that covers our major commodity markets, except for, I guess we got one more. We got natural gas. So natural gas over here, and checking it out, it gapped down a little bit, moved on down 0.5, 0.7, 1.5. So starting to get those volatile moves in at natural gas. And you can get some great moves in natural gas. It can also move really fast in the other direction, so you got to be really, really careful. But right there, just good moves and trendable, tradable trades. And if you're using the stop loss method, you could use that. You could even use them for a re-entry. There's a lot of different ways to trade. Just depending upon what the best method is. Just make sure you know how you're going to manage your risk and how you're going to manage your profits before you step in. Otherwise, it's all just random. And you're going to get random results if you have a random selection method for stop loss and take profits. So you definitely want to have a solid, consistent method that you use in any trading style. So right here, looking at euro dollar, like I said, it moved up to almost 0.5, pulled on down to 0.5, back up to settlement, and is doing a whole lot of nothing at the moment. We got pound dollar, and it has actually shown a little strength. Finally, in the morning hours, it decided to move on up to 0.7. And actually, I did a neutral trade on euro dollar last night, where I did basically a iron butterfly and put that on. So that one is looking like it's going to shape up pretty well. So I did it for 3 o'clock today. Got it pretty nice and wide. All right, well, stay right there, folks. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So now we're checking out some other markets as well, going into the yen pairs. We got euro yen on up, and it's definitely had gapped on up there this morning and then flew on down, doing a little bit of a retracement at the moment. Going in, checking out pound yen, got the exact same thing. Basically had a little support line there at the settlement price of yesterday, as you can see, like right there where it gapped up, and then finally broke through it and then brought it all back. And did the same thing last night, did another iron butterfly over there on Nadex, starting to like those more and more. And we'll go in, check out our USD yen. Right now, it moved on down, and right now it's edging up a little bit higher. We'll see where it ends up by the end of the day. But right now, a little bit higher after the massive down move that it experienced earlier this AM. And we can go into and check out, let's see, got our franc, bring on the USD franc, and it moved, actually got down the 0.5 deviation level, stopped, turned around on a dime, moved back up, back to settlement where it was settled out at, and then you can see as it just sort of ticked along the way there, and then moved on up to 0.5 deviations, and now it's bouncing in between those levels. And the next pair we got, we'll check out the USD CAD. USD CAD gapping on down to 0.5, all the way up to 0.5, and then back down to settlement, hanging out right there. Very similar movement right now to the settlement price. So, anyways, that gives us a current wrap on the market. So lets us see where everything is at, where all the deviations are at. And one thing I want to do is I want to show you some new things that we've added that you may not be aware of that are pretty cool. We've just added these in to the scanner to make it even easier for you to use. And right there, you can click on the TFNN website. You can click on the Diagnostic Box Spread Scanner. And of course, we have the tutorials and everything. But we just added these features to the spread scanner. And what they allow you to do is actually see like open and closed markets. And, we're updating a couple buttons right now on the open and closed at the moment. But so it allows us to, you actually know, like, okay, because a lot of people hop on and they'll go, well, nothing's showing. It's like, well, nothing's open because it's, Sunday morning. So, like right now, silver just closed down 125 right there. Gold will close here in a few minutes. It'll go off right there and show that, that market's not open. And so corn and soybeans are open right now. And you can even highlight over it and it tells you market is open or market is closed. So that'll help you keep track and know why an instrument maybe isn't showing on the screen. And then if we go down a little bit further, we've added in a couple things. What is the underlying contract that Nadex is following? And you can click on there, and it gives you information. The underlying is a commodity. And so on the indices, it follows the index futures, not ETFs or indexes. On the commodities, it follows commodity futures contract. And on Forex, it follows the spot Forex contract. So it's not following the futures Forex. And we go in, we actually post right here, what is the current symbol that Nadex is following? So depending upon, like if you're using NinjaTrader or another platform, then we have the actual symbol right there for you, because maybe you're not a futures trader. You don't know how this works. You have Thinkorswim or you have something else, and you've always been an options trader or a stock trader. So we're trying to shorten that learning curve for you so you don't have to go searching for the information. And so by putting the symbols right there. Also, we let you know, how does Nadex tick? So what's the minimum increment move of how this contract ticks? Well, oil ticks in 0.1. So I put in 0.01, I'm sorry, so pennies. Well, that also happens to be the exact same thing as an oil contract, 0.01. But on a Nadex contract, every tick is worth $1. On an oil contract, every tick is worth $10. And so basically, it takes one oil futures contract, one CL contract, to equal 10 Nadex crude oil spreads. And that's just because they tick the exact same size. So the tick value of $1 to $10, you need 10 to make every tick worth $10. That's why you need 10 Nadex spreads to equal one Nadex crude oil contract. Here's an advantage, though. You could get out of, 5 and 5. So you could get out of 5 at a certain point, or you get out of 2, and then you could tier out of the position. On oil, basically the best thing you're looking at doing is maybe doing like too many oils. So and paying double commissions and all this other stuff. On Nadex, you go in and you can do 10 contracts. And by the way, they cap the commissions at 10. So if you did 20, 30, 40, it's still the same. It's not real commission, it's exchange fee because you're not paying a broker commission. The exchange fee and capped out. So if you do 100 contracts, it's $9. If you do 10 contracts, it's $9 per order that you put in. And that just makes it really, really easy for you. We also now integrated the colors to align right here. So you can see like yellow for your P&L chart. So that's what you're seeing up here is how much money can be made, lost, max risk. And there's a divisor line. So what's the current live price of the oil contract? So can't show you the price, but we can show you basically, right there with that line, it shows you where the current live price is in relation to the spread. So stay right there. When we get back, I'll go through a few more of the upgrades and some ways that you can use this to help you in your trading.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're checking out the spread scanner right now and going through a bunch of the new features we've added in. Such as how to know when a market's open or closed, also how to know what the underlying market is, the symbol for that market is, the tick size and value of the next spread and that market, and the equalization ratio of the futures or forward contract to the spread itself. So looking at that, what else do we got that we can learn that we can use? Well, we can go in here, and now we have some new pieces. We've always had this before, but we've never had it where it was super easy. But what we added is we added in the ability to now actually see which P&L chart's going with the one up here. And so you can click on that, and it'll show it for you, and makes it super simple. And you can, of course, there's a lot of different ways to filter down your spreads, because these are all the spreads that are actively going on oil right now. And that may be a few too many spreads for you at once, trying to figure out which one you want to trade. So what's the easiest way to figure that out? Well, one way is you might try to choose the at-the-market spreads. So by clicking A right there, then it's going to bring me the at-the-market spreads. That's the spreads that are trading within less than 10 ticks of the underlying market. And so I can see actually, what they'd have to do, how far they'd have to move in order to be able to make anything. So here, this is 6 ticks. From the underlying market price, has a $33 risk, $116 potential reward, and only has a 6-tick move to break even. This one could look really attractive because it actually has a -5 tick, which means oil would actually have to go, like, basically oil could go down by 5 pips or 4 pips, and I'd still be break even on the trade. We got some that are 10, but notice my risk reward is really messed up. All right, I'd have to make 270 pips, or I'd be risking $270 to make $28. So probably not the trade that I want there. But that does at least help narrow it down to at the market, and then you can narrow it down further. So you could go, well, what's the actual, most amount that I'd be willing to put up on a trade? And so we could make that number whatever we wanted to. But, let's say at first we'll just make it, $250. So we could say maximum risk, $250. And you'll probably use a little larger number, by the way, if you're using at the market spreads. So we do that, and immediately it just narrowed down our choices quite a bit. And if you don't want to do that, you can even put 0 in there. It'll just reset it, click out of it. It resets it out. And you could go in and you could start to type this up. So I could put like 0.25 reward to risk ratio. Well, that still has some of those spreads, but I got rid of almost all of them that had the horrible risk reward. Probably the simplest way to eliminate them. Now, I'm not seeing spreads that have a $25 reward for, $100 risk anymore. And so I can see all these ones right here that actually, are a lot better trades for me. And I can cap this risk out. Like maybe I don't want to see the master spread, $482 right there. So I could go in and make this 250 or 300 or whatever. So I maximize that out. Now I've narrowed it down. Now I don't have the master spreads on there. I'm probably not going to trade those. A master spread is the widest spread. It'll probably have the most risk and most reward potential in the trade at the same time. So I more want the risk and reward to be tilted in my favor. And just made it very, very simple for me. So that's one way to find the spreads that are mirroring the underlying market is just, put like 0.25 here, choose at the market, and then you can choose max risk to get rid of, trades that you're not willing to do that. Now, one thing I always like to point out is max risk does not mean total risk. Okay, this is not a binary. It is a spread. And so again, max risk does not mean total risk. So I could get out of the trade if it moves 10 ticks against me, or I could stay in the trade. I can do whatever I want to on this trade. I don't have to take on that max risk. So my risk could actually be equal among all of them if I was going to get out, say, if oil moved down 20 ticks. There really wouldn't be any difference in my risk on any of the contracts. So now it just becomes a matter of how much margin do I have. And we could go over, we'll find something even simpler. We'll go, say, euro dollar. And, we get a lot smaller. Oil is, of course, a lot more volatile instrument. And, of course, this one, the master spreads are only 600 points wide. So I need to make that a little smaller. Maybe I'll bring this down to 250. Get rid of those master spreads off there. And now I can see, the ones that line up. And, this is 2 ticks away, $54. 5 ticks away, only $7. And 2 ticks away, $139. 5 ticks away, $17. Have 3 o'clock expiration. And you can go, well, I don't want a 3 o'clock, I want a 2 o'clock. Or I don't want a 2 o'clock, I want a 3 o'clock. So if you want more time, you can say, well, I want at least, an hour till expiration. Now you want to turn that off, of course, in the last hour, you'll see nothing there. But that'll give me just the 3 o'clock spreads. Now I can just look at those. So it's a very simple way to find, you can go up here, you can do at the market, 250 risk, at least an hour to expiration, and that'll help me narrow it down. So you just start using those filters piece by piece, and it'll make it a lot easier for you to find the spreads that are going to work best for your trading strategy. Okay? And that really is the key that you're wanting to do. You're wanting to find, again, the ones that are going to work best for your trading strategy. And maybe you're scalping, maybe you're going for volatility moves. I don't know exactly what your strategy is. Maybe you're swing trading, and so you have enough room. So it's okay that it has to move, say, 9 ticks because you're expecting it to move, 40 ticks. So, hey, if I can only take on a $10 risk, not have a stop loss, and, it has to move 9 ticks to get basically my $9 back on the trade, okay? But I'm going for 40. So that's still a, 300% return on my trade. So I'm okay with the 9 ticks to break even. But if I'm scalping, I'm getting in and out of the trade, and I plan on getting out in 15, 20 ticks, well, 9 ticks obviously is going to eat up way too much of that, and I won't even be at break even until I get there. So if you're going for really small trades, you want those ones that are really close to break even. If you have a target that's larger, then you could be better off choosing the spread that actually gives you a little larger break even distance but lower risk, and you don't have to ever worry about getting stopped out on that trade. So that's just a big advantage on those trades that you're doing whenever you're trading over on Nadex. You don't have to worry about getting it stopped out. So now we can walk through, check out a few of these different markets. And we got the currencies here, so you can see the Aussie dollar. We'll bring those up. Aussie dollar, Euro dollar, and pound dollar. And you'll notice on these that you had the ability to, let's turn off a couple of these. There we go. That one's up and working, and that one's up and working. Okay, great. So, and we just updated these to actually even include some of you guys out there, you like to trade futures forex. I don't blame you, so it's a lot better. You're not dealing with the over-the-counter stuff out there. And so we actually added in the equalization ratio for what it would take if you want to do forex and, supplement what a forex trade would be for forex futures, or if you wanted to hedge your forex futures. So this gives you an idea of how that will work for you. And again, we lay out Nadex, and then in this case, this will give you two examples. We'll give you the Aussie dollar mini lot, which is the underlying market, the spot FX, and we give you the Aussie dollar right here, the actual full futures contract, 680613. So you know how to use that. But you can go in, you can look at these markets, and we got Aussie dollar laid out. We got euro dollar. Notice it ticks in 0.1, just like the other contracts. We've got pound dollar, ticks in 0.1. One thing to note about all these is they all have, and if you're new to forex or you don't know about forex, you have two quotes. You got pound and you got dollar. The first one is called your base currency. Okay, so that's your pounds. The second one is called your quote currency. So if you were buying over on the standard, forex spot market, a mini lot, you'd be buying 10,000 pounds. You're buying the one on the left. So the one on the left is one you're actually buying. And the quote for it, or selling, so you're buying or selling 10,000 pounds, the quote that is given to you in is the one on the right. So to help you out with that, make a little bit more sense, if I go in and a mini lot is equal to 10,000, okay? So 10,000 is a mini lot, so 10,000 pounds in this case, because it's always going to be the one on the left. So 10,000 pounds, and the quote is 1.5271. Then I can multiply that times 1.5271, and that's $15,271. That's actually the buying power of that spread, or the buying power of, if you did a mini lot in forex, the actual value of the contract. So if I know that, then I can go, well, what is 50 to 1? So 15,271. If you're a forex trader on the spot market, you're getting a 50 to 1 leverage in the U.S. Divided by 50, you're going to put up $305 to do a pound dollar mini lot trade. Over here, as you can see, you don't have to put up $300 on any of them. So you're getting greater leverage, often 3, 4, 5, 10, 20 times that amount. If I go in and go, cool, 305 is my the dollars I have to put on a 50 to 1 leverage. What if I want to put up, $10 or 20 or $30? Like this trade right here, $10 risk. So $10 risk on the trade on a 15,271 divided by 10. So would be 1,000. That's just huge. It's a 1,527% leverage. So it's absolutely huge move, massive leverage. So all your dollars are acting like they're worth $1,527. Once, obviously, you get to break even, because you got to get those 9 pips out of the way. So now the ones that are smaller, like 3 pips, it's kicking in right away. Just, very small move, and you're right there. But you can see, 50 to 1 versus, 1,500 to 1. And, even if you go down further, if we go down and we look at the ones that are $75, again, 15,271 divided by, 75, 200 to 1 leverage right there on that trade. So you get some really, really, really good leverage, much better than 50 to 1 leverage that you're getting over on the spot FX. Now, that's honestly pretty easy. Okay, that's your base. It's a number, this many, and your quote. But it gets more complicated, and I'm not going to go into all the complications of it. But it gets more complicated when you start dealing with something that quotes in something else. So if it's US yen, it's not too bad, because it means $10,000. So that's actually pretty simple, right? So 10,000, and if you got 50 to 1 on spot FX, you put up $200. Pretty simple. And the quote, well, the quote is that's worth let's see, what is that here? 99.39. So 19,000 yen. All right, and it might even be higher than that. I may have misquoted there. Times 99.39. Yeah, 993,000 yen. So just because it takes 99 yen to equal $1. And That's not too bad, because at least you know, hey, the left one is dollars, so that's $10,000. But then you go and you're trying to figure out pound yen, and you're trying to figure out what is your leverage and your margin in that. And so you literally have to go, okay, well, that's 151,000 pounds, okay? And I need to convert that into dollars. And so then I go up here to pound dollar, and I have to look at the pound dollar quote. And then I'd see pound dollars quoting at, 52.74. So then I'd have to multiply it times 1.5274. So 230,000, So times 1.5274. There we go. Yeah, 23,000. So you go in, you sort of start to see how it works. But again, this is going to show you in pounds, not in yen. So yen is the quote. This is the base. That's what you're buying or selling. And this keeps a lot of people out of Forex, because everything I just said feels extremely confusing. Well, in Nadex, you don't have to deal with any currency conversion whatsoever. It's very, very simple, because guess what? Even on the pound yen, every tick, it does right here, a tick is 0.01, is worth $1. All right, so again, every tick is worth $1. And notice how we say a tick on a pound yen, every tick is 0.01, but we don't tell you the value because it's a foreign currency. Okay, so we can't equivalize it because it'll constantly be dynamically changing as the pound and the yen change, is what that value of that actual contract was. So, anyways, that's just a quick summary of how to do the trade, how it works. But I just want you to see more than anything, you're not having to deal with pounds and yen and euros and francs and Canadians and all. You don't have to deal with any of that to trade Forex. If it goes up 10 ticks, if it goes up from 68 to you sold at 78, you make $10. Okay, if it goes up to 88, you make $20. If it goes up, a whole dollar, so it'd be 100 ticks, right? You make $100. So very, very simple. That's all you're dealing with is simply dollars. You're not going to deal with all the different other currencies. And so now you go in and you can trade currencies, but not having to think in different currencies. It's just, you might as well call it product A, product B, and product C. I mean, if you looked at the quote of a stock at 151.67, you wouldn't think twice about how difficult that is to calculate your profit and loss. This is the same thing, except for, imagine you're buying 100 shares of stock at all times, because every tick is worth $1. Okay? So, but it's the exact same thing in the sense of, it's just dollars. You're just dealing with dollars. And if you'll keep it that simple, then it'll open up the whole world of currency to you that you may have avoided because you didn't get the whole FX conversion thing. And now you don't have to get the FX conversion thing because it doesn't matter. The quote going up is the quote going down. Are you following the chart? And keeping it simple. And this doesn't just apply to currencies. This applies to multiple. Now you see gold's closed right there, so the market is closed. And so it applies right there. And then we go over here, even on the DAX and, the FTSE, we can go and we can see on that market, I'll have to, here we'll reset the filters. But you can see right here, same thing. So it actually tells it it's Euro 5, so $5 per tick. It ticks in 0.5. Nadex is 1, value is 1. You don't have to deal with 0.5s, and you don't have to deal with quarters. You don't have to deal with $1 and $5, $1 and €5. It's all dollars. It makes it super, super simple for you. All right, Derek there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on here to the Diagnostic Trading Hour. Just doing a wrap-up going through, and I wanted to show you on the DAX as well, the same thing. Even though each tick on the DAX is 12.5 euros, Nadex ticks in dollars. So, again, keeping it very simple for you. And then you go to things like, the S&P 500. And people get all into that, but it ticks in quarters, and every quarter is worth $12.50. And that, again, can get complex. Well, in Nadex, every tick is always in an increment of 1, whether it be 1 or 0.1 or 0.01 or 0.001, and every tick is always worth $1. So, if the S&P moves 1 point, and it's ticking on Nadex in 0.1, well, that'd be 10 dimes, right? Which is $1. So, that would make a move equal to $10 after a 1 point move. What about the S&P 500 futures? Well, they tick in quarters. So, if it moved $1, 4 quarters in $1, $12.50 a quarter. So $12.50 times 4 is 50. So since on the S&P a $1 move is worth $50, and on the US 500 on Nadex, a 1 point move is worth $10 on, again, a point, not a tick, but a point. That's why it takes one S&P to equal 5 Nadex US 500 spreads, because every point's $10 on the Nadex spread, so you need every point to be worth 50, so you need 5 Nadex spreads to make every point worth $50. So, but I mean, this just, you know, one of the nice things is you don't have to worry about all that. I'm just trying to help you out, so when you're looking at a chart, if you're trying to do equalization, try to figure out how it works. But the nice thing is every single Nadex spread ticks in ones, increment of 1, like I said, 0.1 or 0.01 or 1 or 0.0001, whatever, but it's always worth $1. It makes it extremely simple for you to be able to trade. And with that, let's go ahead and do a quick market wrap right now. We got the S&P currently up 6 points. We got the NASDAQ up 28. The Russell is up 2.4 on the day right now. And looking on over, we got the Dow is down 1 point, so almost flat. Then we got gold up 29. Silver currently is up 42, so 1.87%, with copper still down 0.5%, oil down or up 65 cents, corn down 6, soybeans down 11.75. And the euro dollar is still flat on the day, with the pound dollar up 34 ticks, Aussie dollar down 25, euro yen down 31, and pound yen down 6. U.S. yen is down 28, with the U.S. Canadian down 8, and U.S. franc up 11 ticks on the day at the moment. Now, if you haven't done so already, make sure to hop on over to our website at tfnn.com and click on the Nadex banner, and under our products, you can get a demo account. Click on demo account. If you want to know how to get that extended, let me know. But fill in your username, first name, last name, phone number, and email address, and click apply for demo. And they'll send you an email right away. You'll be able to get your password and log in. To get a live account, it only takes $500 or $100 to fund a live account. I recommend people put in $500 or $1,000, of course, but if you're actually going to start live trading. But not necessarily I recommend, but I mean, come on. You know, I mean, you want a little bit more, but you actually can place trades with only $100 in your account. You can go from start to funded immediately. You don't have any kind of day trading restrictions. You don't have to worry about any kind of exercises or things being assigned to you. Nothing like that, like with futures and options. And then once you do that, hop on over here and register for your free trial of the Diagnostic Box Spread Analyzer. Get access to all the tutorials, the deviation levels, the Live Spread Analyzer. It basically teaches you how this works. And then last step, make sure that you do this if you haven't done it already. I'm already getting a lot of emails from people that are excited, getting ready to go. We got our Boston workshop coming up, free, sponsored by Nadex, and it's going to be this coming Saturday here in a couple weeks here, just on May 11th, okay, 8:30 to 12:30, and space is limited. You have to register to reserve your seat, so fill that in today, and I look forward to seeing you live in Boston and helping you learn more about how to trade on Nadex. Have a great day.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.